Welcome back to the cryptowrld channel, everyone. My name is Josh, and right now, Ethereum is still playing out this shorter-term bearish divergence, while a rare signal is flashing for Bitcoin that usually only happens around once every 4 years. So I'll be talking about that in just a moment. Definitely stick around. First of all, just giving you a really quick update here on the 4-day Bitcoin chart. And right now, as of recording this video, according to the super trend indicator on this time frame, obviously the price of Bitcoin is still within this larger bullish trend. But once again, as I've said in recent videos here on the channel, we still need to see a weekly candle close above around 31,000 in order to actually confirm the breakout above this significant resistance. So at least as of right now, we have not yet seen that confirmed breakout above 31,000, which means around that $31,000 level is still the important resistance to pay attention to. And now, if you're zooming into the daily Bitcoin chart, once again, the price of Bitcoin is still running into this important resistance going up towards around 31,000. And on top of that, like I've said in recent videos here on the channel, we also have a small bearish divergence currently playing out on the daily Bitcoin chart because we do have confirmed higher highs in the price in the daily candle closes, while also confirming lower highs in the daily Bitcoin RSI. And so this is further confirming the fact that we have reduced bullish momentum in the shorter term, and that we're due to see a bit more of a short-term cool-off from that previous bullish price action, which can play out in the form of either choppy sideways price action or potentially a slight pullback in the shorter term. So once again, at least for the next few days or so, I wouldn't necessarily expect a lot of bullish price action in the imminent short term. But as always, it is important to understand the difference between the shorter term and the longer term. So even though we're playing out a bit of a short-term cool-off, seeing less and less bullish momentum, that doesn't necessarily mean that the longer-term bullish trend is completely over. Because, for example, we saw these short-term bearish trends throughout this larger bullish trend. And also, while this short-term cool-off is currently playing out in the price of Bitcoin, obviously this is helping to further reset the daily Bitcoin RSI, which is actually giving the Bitcoin price some more room to the upside later on after we potentially finish this short-term cool-off, which could happen over the next few days or potentially over the next week or so to continue to play out this short-term cool-off. And then eventually, once this bearish divergence finishes playing out and eventually once the RSI has reset enough, then we could potentially continue on with the larger bullish trend and potentially see a breakout above 31,000. But obviously, we still need to wait for confirmation in order to actually confirm that breakout and set up the next significant price target. Which, by the way, in that case, if we do set up that next significant price target with a confirmed breakout, next I'll be targeting towards around 37,000 based on these previous Fibonacci extensions. And while we're still looking at the daily Bitcoin chart, looking at that daily Bitcoin MACD, right now, obviously, this is crossed in the bearish direction, as I've said over the last 2 days. So technically speaking, this is a shorter term bearish signal. But with that being said, as of right now, it's still showing relatively low momentum, which means we shouldn't exactly expect a massive crash or a massive dump straight to the downside. And instead, once again, we're likely going to see either some more choppy sideways price action or potentially a slight pullback in the shorter term. And now, speaking of the shorter term, taking a look at the 3-hour Bitcoin chart, and as of recording this video, the price of Bitcoin is still currently trading in this choppy sideways price range in between this area of support and these areas of resistance. First of all, this support once again is sitting in between around 29.9k to 30.1k, and as for resistance, we have this area sitting in between around 30.8k to 31k, and above that we also have this level of resistance sitting at around 31.3k. So at least in the imminent short term, while the Bitcoin price is still holding above this short-term support, I'm very neutral in the short term, expecting mostly choppy sideways price action like this. But if we start to see a confirmed break well below 29.9k with candle closes below that level, then in that case, that's when I'll start to flip more bearish again, at least in the short term when you're talking about the shorter term trends. price. And in case you're wondering what the point of invalidation is for the larger bullish trend, if you're taking a look at that super trend indicator on the 4-day time frame, once again, the invalidation level is sitting at approximately 24,500, which basically means if the Bitcoin price were to come all the way back down below 24,500 and confirm a break below that level with large candle closes, then in that case, that would point towards a trend reversal on the larger scale. But once again, at least for now, even though we might be looking neutral to bearish in the shorter term, we're still looking bullish on the larger timeframes. And one of the reasons behind this could be due to the fact that we have the 4-year halving cycle, because in case you don't already know, the Bitcoin halving is a major fundamental event for Bitcoin that happens roughly every 4 years. And what it does is basically halves the new issuance or the block subsidy for Bitcoin, which basically halves Bitcoin's inflation rate. And so therefore, the Bitcoin miners are getting less block subsidy as each halving goes on. And so therefore, the halving technically increases scarcity and reduces sell pressure because the miners have less Bitcoin to dump on the market. And so due to that, due to the halvings making Bitcoin more scarce and creating less sell pressure, obviously this has historically been bullish for Bitcoin. We usually see bull markets around the halving and following the halving, and we usually see bear markets in between those cycles. Once again, those 4-year halving cycles. And if you're taking a look at this Bitcoin chart right here, this is actually an on-chain Bitcoin chart because part of it derives from Bitcoin's blockchain, not just the market value of Bitcoin. And so first of all, this black line is the regular Bitcoin price or Bitcoin market cap. And this blue line is what's called the realized price or the realized market cap for Bitcoin. And basically how we get that realized market cap is essentially when a Bitcoin moves on chain. So when you transfer Bitcoin from one wallet to another wallet, then whatever the Bitcoin price is at that time of the transfer of that Bitcoin, that basically sets the price of that Bitcoin in this indicator. So for example, if I were to buy a Bitcoin at $10,000, let's just say, and then I held that Bitcoin all the way through the previous bull market up to the all-time high, and then I moved that Bitcoin to an exchange, for example, to sell it, then in that case, if the price when I moved that Bitcoin on chain was $60,000, that Bitcoin on chain in this indicator would be recorded at a realized value of $60,000. And so essentially this realized market cap or the realized price basically takes into consideration when Bitcoin are moving on chain, whereas the regular market cap or the regular market value for Bitcoin doesn't necessarily take into consideration when Bitcoin are moving on chain. It's just the buys and sells that happen on exchanges. And so this gives us these two different prices, which are very interesting because usually in the bull markets, we see the regular market value for Bitcoin, the regular market cap, trade above the realized market cap. And then towards the end of the bear market, when not many people are moving their Bitcoin around and a lot of people are dumping their Bitcoin on exchanges, we see the regular price of Bitcoin, the market value or the regular market cap of Bitcoin, this black line, drop below the realized market cap or the realized price, which usually signals the bottom of the bear market. And once again, due to the Bitcoin halvings, this usually happens once every 4 years approximately, with the one exception of that March 2020 crash, which obviously was a black swan due to the virus that happened at that time. And in case you're wondering, this orange line right here is basically a standard deviation to show us when the black line, when the market cap is below the realized cap. That's basically putting the orange line into the green box. And then when we see the regular market cap, this black line, multiple standard deviations above the blue line, above the realized market cap, that results in this orange line, this standard deviation to shoot to the upside up into this red box, which usually signals towards the top of a bull market. And now if I hide my face cam so you can see the full chart right here, and if we're taking a look at the current phase in the 4-year cycle that we're in right now, as you can see, this orange line is now leaving the green box, which is basically leaving the bear market bottom area. And once again, apart from that one-off black swan event during March 2020, this usually happens once every 4 years or so. First of all, this first happened back during late 2011, entering into early 2012, which basically signaled the bottom of a major crash that happened during 2011. And then if you're looking at the next 4-year cycle, obviously we saw a bear market during 2014. And then we saw this orange line enter into the green box, which meant the Bitcoin price was basically near the bottom of the bear market in the bottoming out stage. And now if you're taking a look at the next cycle, obviously we saw a bear market in 2018. And then we saw this orange line enter into the green box again towards the end of 2018, entering into early 2019, which is right where that bear market bottom came into play. And if you're taking a look at the current phase in the cycle that we're in right now, this orange line has already now left the green box, the bear market bottom area. So this is definitely something very interesting to pay attention to, looking at the larger Bitcoin cycles. And I'll definitely like to hear your thoughts about this chart right here and about the 4-year Bitcoin cycles based around the Bitcoin halvings happening once every 4 years. So definitely let me know what you think about this in the comment section down below. But anyway, now getting into the Ethereum part of this video, this is on the daily ETH to US dollar chart. And right now, as of recording this video, technically speaking, the price of ETH is still within the larger multi-month long bullish trend. But obviously, as of right now, in the shorter term, we're playing out a bit of a short-term pullback. And the price of ETH is running into this important area of support sitting in between around 1770 to 1820. And as for the daily Ethereum price oscillators, right now the daily Ethereum RSI is looking relatively neutral, and the daily Ethereum MACD just now confirmed a new bearish cross. And so technically speaking, this is a shorter term bearish signal, but once again, it's still showing relatively low momentum in the short term, which means we shouldn't exactly expect a major crash or dump in the shorter term. And instead, we're likely going to see either a slight pullback like what we've seen over the last few days, or potentially just a bit of choppy sideways price action in the shorter term. And now staying on the daily time frame, looking at the Fibonacci levels of support from swing low to swing high at the Fibonacci retracement tool, we have the 23.6% Fibonacci level sitting at around 1820, acting as an important level of support. And below that, the next important support on the daily time frame is the 38.2% Fibonacci level of support sitting at around 1640. And now if you're taking a look at the 12-hour ETH to US dollar chart, once again, as I've been saying since all the way back up here, we do currently have an active bearish divergence currently playing out in the price of ETH in the somewhat shorter term, because we already have confirmed higher highs in the price of ETH in the 12-hour candle closes, while also confirming lower highs in the 12-hour Ethereum RSI. And so once again, this basically means we should not really be expecting a significant amount of bullish momentum anytime soon in the shorter term. And instead, we're likely going to see either some choppy sideways price action or potentially a bit more of a pullback in the shorter term. And speaking of the short term, if you're looking at the 6-hour ETH to US dollar chart, right now the price of ETH is potentially still forming this potential head and shoulders pattern, as I said in more detail in my last video on the channel. So if you missed that video, definitely check that video out if you want to know more about this potential head and shoulders pattern. And now if you want to know how to maximize your profits in crypto, no matter if the price is going to the upside, to the downside, or simply chopping around sideways, then make sure to watch these videos popping up right here on your screen. The video in the top left shows you how to make money if the price is either bullish or bearish using AI, and the video in the bottom left shows you how you can easily profit from a choppy sideways price range. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.